You make sure it's on your demo account because we'll practice live trading.
Yeah, I believe it's demo because I've not funded anything.
Yeah, okay.
Yeah. Can you see my screen?
Yeah, sure.
Okay.
Okay, good. So this is how the MT5 looks like. So go to quotes. Let's start from quotes. So good. So this is your MetaTrader 5. This is where we'll be executing trades. This is where we'll be buying and this is where we'll be selling. So MT5 is like it's an application, it's a terminal where we execute trades. All right, so this quote is where you can find your currency pairs. This quote is where you find your currency pairs. This is where you can also add and delete currency pairs. Now you see there's a button just under your time. 80 under your time. There's a button
That
there.
one.
Click on it. Yeah, click on it. Exactly. Leave it like this. Click on it once. It should always be like this. Your
Okay.
quote should be showing like this all the time. So now that we are here, so if we want to delete, there's a lot of pairs that I really don't trade. So we'll use them to we'll practice with them and delete them. So here you can add currency pairs and here you can also delete. So here it's just like your watch list. In the same way you have like on trading view, I showed you guys a watch list section. So here too is like
Mm-hmm.
the watch list section where you have currency pairs that you have your eyes on that you're looking to trade, continuously. So we have some currency pairs here that I don't even want you to have on your watch list. So let's use them to do. So let's remove them from your watch list. So first, you click on that pencil that is beside quotes.
Okay.
Good. So it will allow it will enable you to highlight certain currency pairs that you don't want on your watch list. So highlight
Mm.
USD click on the circle. Highlight USD card. USD card, I highlight AUD and ZD. I like everything from AUD and ZD down, not AUD USD, AUD and ZD downwards on tick that AUD USD. Good. So see the delete button at the top. Exactly. So that's how you delete. Now let's add some new pairs to the watch list. Let's add gold and crypto. So XAU USD. X X, not C,
X.
X, yes.
Yeah.
USD. We have the first one. So you can see gold versus USD. Back, click on the circle. Back, back, back. Go back.
Yeah.
Click on the circle. Good. Once you click on cancel, it has added it automatically.
Okay.
Click on cancel if you see it on your watch list now. Good. So let's add one
Yeah.
more. Let's add BTC USD. So BTC USD is for crypto. Search for BTC USD. Aha. So click on the circle. Exactly. Click on cancel. Exactly. So now we've added some new pairs. So this same way, in case you want to trade a currency, that you don't have on this watch list, you can also search for it there and you can also add it to your watch list. And if later on, you become a professional and you say all this currency pair that's mentor gave me, I don't want them, Joe. You can delete them by yourself. So for now,
Okay.
let's make it also. So we'll practice with one, we'll practice with two, we'll practice with gold, and we'll practice with regular currency pair because I want you to see the volatility. So let's start with gold before the market closes. So tap on gold.
Sorry, please, before we continue there, what you
Yeah.
just did now,
Yeah.
I was trying to do it. I don't know if mine is okay. Where did you go first again?
To start your quotes now, just go to your MT5 on your
Yeah.
quote. Then quotes. You see currency pairs, you see a pencil at the top. There's an
I,
there, right? So
I don't know what's happening to my computer. It's
I'm not,
showing
not
me
use your
okay.
computer, your phone.
Oh, my phone?
Yes, not your computer, your
Oh,
phone.
not my computer. Okay.
Use
I
your
can't do
phone.
MetaTrader 5 on my phone on my computer.
Use it for your phone. That one is
Oh,
another
really?
secret now. I have to start teaching you again how to use it from on your PC. Like, Just use
Okay.
your phone. You understand? It's like another thing entirely. But nobody's using it on their PC, so everybody's using it on their phone. So if you're using it on your PC, it means you want to. Can you be taking trades inside your car from your PC?
So, sorry,
Yeah.
before you make progress, what you just did now, you removed some items. I'm trying to quickly remove it before we
I removed some
progress.
currency pairs on our watch list
Y-
and added some.
Yeah, how did you do it again?
If you're on your phone, just click on codes.
Yeah, I'm on quote already.
And just you see a pencil at the top of your screen. Click on
Yes.
the pencil. You
Yeah,
should be able to
I'm
add.
there.
Click on the pencil, you will see how to remove. You just tick them. You will see delete at the top. So you delete. If you want to add, you see the enter symbol for search. You search for any currency pair you want to add. So from that pencil, you can delete any currency pair. If you want to add, you see the enter symbol for search, just like it is on our screen. That's where you
Yeah,
search for currency pairs. If you want
got
to
you.
add them. So all you just need is
Okay,
that circle. Once you click on that circle, you're either deleting or you're adding. You
it's
start
okay.
any that circle is like highlighting currency pair. So they can let's go to chat. Go to
So
chat
the ones you kept just now was Euro USD.
and GBP USD and gold.
So which one did you remove?
I roll a lot. Okay, I don't know what is on your screen. Yours will be different. So
I have Euro
I
USD,
keep only
GBP
Euro
USD.
USD, GBP USD, delete the rest.
Which one should I delete?
Keep only Euro USD and GBP USD, delete the rest.
Oh, okay.
Yeah. So then add gold when you're done. So see that M1 and the game at the top.
Mm-hmm.
Click on it. Yeah, change it to like H1. M1 means 1 minute. I don't like this in the 1 minute time frame. I do use it though, but you can't use it because you're just starting. I use
Okay.
it. All right, like me personally. Oh, how do I say it? So this is 1 hour. So higher time frames. Let me just give you this clue for future purposes. Higher time frames are the best time frames for like trading. You understand? So they
Mm-hmm.
are like the more higher the time frame, the more solid the trade outcome. You understand? But lower time frame now, it's like M1. So it's like each candle is forming every 1 minute. So basically, your trade can hit stop loss in 1 minute or take profit in 1 minute. Most It's not a stable time frame. You understand? So the M1 is not a stable time frame. There's a lot of noise. So always stick to the higher time frame. Now, when we get to technical analysis majorly, I'll teach you how to do what we call top-down analysis, analyzing from the higher time frame
Mm-hmm.
down to the lower time frame. Good. So for now, just make it a little. So now at the top of that, your H1, you see those other buttons there. The only one you have to focus on is the circle and the rectangle button. So now, the circle button that has the red and blue color
Mm-hmm.
is used for executing trades, but it's used for what we call pending order. Now, pending order is when you are setting a trade order ahead of price. You are setting a trade execution order ahead of price. That means you are saying either you want to buy or you want to sell now, or you want to sell a particular pair, but you want to sell it ahead of price before price get there, or you want to buy it before price get there. So you set a
It's like
pending order.
limit order.
It's a limit order, yeah. So you set a
Okay.
pending order. So they are called
Mm-hmm.
limit orders also. So once you set them at any particular price, as soon as the market gets to that price, it will execute your trade for you instantly without you being with your phone. You
Mm-hmm.
understand? So all you just need to do is set the parameters. So uh let's click on it. So let me explain what all of them are. So if you click on the pending order, if you take that section upwards, you see below your screen, you'll see that there's a section that is hiding. Aha. So if you take it upwards, exactly, you can see that we have market execution. Market execution is the same thing as that rectangle button that has the that has the red and blue color. That's the market execution and that button both do the same work. That means you are taking the trade. Now is an instant execution.
Okay.
Now the buy limit and the sell limit. Let me explain what the buy limit is. The buy limit now, if you are setting a buy limit, you are telling the market that you want to buy below the current price. A buy
Mm.
limit is an order that is set below the current price, but you want to buy. So you're waiting for price to sell So a particular price below, then it will not activate you for a buy. Remember, a buy limit is an order that you set below the market price. Remember again, a buy limit is an order you set below the market price. Now, a sell limit is just opposite. A sell limit is a market order you set above the market price. So a sell limit now, you are looking to sell, but you want to sell above the current price. Let me give you an example. Let me give you a real life scenario. Now, because everybody does this too, I don't know, you subconsciously or consciously. Let's say I did it too for iPhone. Let me use my iPhone as an example. When the iPhone 17 came out, the price was probably about 2 million. I think the Pro or the so it was expensive a bit, 2 million, 1.8. So now, instead of me buying immediately at that 2 million, 1.8, I probably, because I know that the price is still going to drop later on, a few months later, I will decide to wait for it to drop. Let's say I'm waiting for it to drop to 1.5. You understand? Now, that 1.5 I'm waiting for is my buy limit order. You understand? I'm giving you a real life scenario. That's how it works on the chart too. So now, me waiting for it to drop to 1.5 mil is a buy limit order. So what I just did there now is I set a buy limit order to buy iPhone at 1.5 mil. Do you understand? I set a buy limit order to buy an iPhone at 1.5 mil. So as soon as price gets to 1.5 mil, what do? It automatically, my trade will execute. You understand? So if now I did it in a real life scenario and I inform my bank or something with a dealer, automatically, and I authorize my bank to remove that said amount from my account, that would be like that would be something similar to this. So automatically my bank will be authorized to remove 1.5 mil to buy the iPhone without needing my permission as soon as it gets to 1.5 mil price. So now that's what MT5 does. Once it sets that order, as soon as price get there, it just automatically deducts it from your balance. Do you understand? It just automatically execute the trade and your trade start reading. So if the trade hits stop loss, it will deduct it from your balance. If the trade eventually becomes profitable, it will add it to your balance. So without you executing it, without you being with your phone. So it works best, limit orders work best when you are busy. If you are somebody that works, yes, that if like me now that I'm teaching, yes, that and I'm teaching and I want to take a trade, right? I can easily use a limit order. So as I'm teaching, since I'm not going to be on my chart, I can use a limit order. So once price gets to where I want to execute, it will execute without me, taking the trade myself on my phone. That's the essence of limit order. So sell limit is an order you set above price, while buy limit is a buy order you set below price. Now, buy stop and sell stop are two different things too. So a buy stop now, you set a buy stop above price. Remember, a buy limit, you set it below price, right? But a buy stop, you set it above price. So a buy stop, you want to buy, but market has not gotten to that a particular price you want to buy that is above the current price. That's a buy stop. So as soon as price is buying, if it gets to that price that is above it, it will trigger you for a buy. So a buy stop is set above price, while a buy limit is set below price. A sell
Sorry,
stop,
I have a question.
yeah.
Why will I want to buy above price?
Depends now for too many reasons. You understand when you do technical analysis. You want to
Okay.
buy for too many reasons. People do it, but me, I don't do it. I don't buy at the high price. I buy at the low price. So there's a different strategy. I told you, people have different strategies when it comes to trading. You understand?
Okay.
So some people can decide to buy at a high price. Just whatever strategy they use. You understand? So it's just for whatever reason. But me, I don't. So there's what we call a sell stop. A sell stop too, you're selling below price. You're waiting for the market to get to a lower price, then you sell. That's it. So that's the major limit orders we use. The rest, I don't make use of them. So I'm not going to point you towards that direction. Now, you can see also we have what we call volume. And volume is same thing as what we call, damn, I've missed a trade. Hold on. And this thing trigger me. No, no, no. Wait a second. I was trying to trade Brits. I'm here. I'm trying to do something. I'm trying to execute the trade, sorry.
No problem.
Yeah, we have to make money for weekend.
You're
Right.
doing so
Necessary.
many things at the same time.
Ah, the money must be made. Okay, as in Nigeria, I have to learn how to delegate.
His lifestyle is expensive.
Ah, lifestyle is expensive. Oh. To be
We must buy the
honest,
Ferrari.
Lagos lifestyle is expensive. So anyway, so that's it for limit orders. Lot sizes, yeah. Lot sizes, I'm going to explain that right now. So lot size is the major thing in forex trade. A lot of beginners don't really know
Sorry, you were
how to,
on volume. Oh, you did not conclude on volume.
volume is the same thing as lot size.
Okay.
Yeah. So it's just another name. So lot sizes are something that every beginner should know. A lot size is very, very important because without a lot size, I bought at a high price, but anyhow, we'll get down. So
You did
a
not
lot
set
of begin
your sell limits and buy limits.
buy stuff. I don't want to set the limit on that. I execute the trade live. There's what we call lot size. This lot size now is very, very important. It's what determines how much you make and how much you lose in a trade. Very, very important. Lot size is what determines how much you make and how much you lose. If you put a wrong lot size, you can blow your account in seconds.
Mm.
Listen, this is where a lot of people, in fact, though this thing can work in your favor, it can work against you. Size is something that is something that every beginner should understand, know how to calculate. You need to learn how to calculate. Lot size works with something we call the PEEP. Remember PEEP? I said PEEP is the measurement you use to calculate price movement, right? PEEP is the measurement in which you use to calculate price movement. You can also call it points. PEEP or points, they are the same thing. So if you want to calculate price movement from one figure to another figure, you calculate in what we call pips. And that's what the long and short position tool is used for. The short and long position tool I showed you on trading view is used to calculate pips. Now, I also told you guys you have a bot that you can use to calculate this lot size, which is where we are going to. But first, you need to understand how lot sizes work. So lot size, we have three types of lot size. We have the standard, we have the micro, and we have the mini. We have the standard, mini, and micro lot. You won't see there. So we have the standard, we have the mini, and we have the micro lot. Now, the standard lot, the standard lot is a whole number. Anything from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is a standard lot. See 100, as long as it's a whole number, it's a standard lot. Now, any lot size that comes after the 0 point, after the decimal, 0 0.10, 0 0.20, 0 0.30 till you get to 0 0.90, they are called mini lots. Now, any number you get to, now, micro lot is the smallest lot size you can use. It's the last point, like this 0.01 is a micro lot. 0.02, 0.03 till you get to 0.09. They are all micro lots. You understand? So micro lots are the smallest lot size you can use in forex trade. So every beginner, I always advise them to stick to micro lots until they understand how to trade, until they know how to trade properly. Right. So now the micro lot, well, if you're using a micro lot, you are losing in cents, especially if you are using the 0.01. The 0.01 will make you lose 10 cents per pip. So let's say market move one step, either in your favor or against you. You're either making 10 cents or losing 10 cents. That's for 0.01. That is, if you move one step in your favor, you're either making 10 cents or losing 10 cents. Why? Same thing 0.20, 0.02, 20 cents. It's just multiplication. So the as it goes, it just multiply. So the mini lot is 0.1. The mini lot is $1 per pip. So if you are using 0.0, if market move one step in your favor, that's one pip. The right word is one pip. But let's say one step, either in your favor or against you, you'll be losing or making $1 per pip. So for one standard lot, if the market move one step or one pip in your favor or against you, you'll be losing $10 per pip. You start or making $10 per pip. That's for the standard lot. So Once you understand that the standard, the mini, and the micro, you understand they are one variable, you'll be able to just multiply it out times how many people or times how many lot size it moves. So for if you increase from 0.1 to like 0.5, that's $5 per pip. You understand? So if the market can move, it can move 10 pips in 1 second or in 10 seconds. Like it moves very fast.
This is
Depending
sorry,
on
this is 0.5 is $5.
Yeah, 0.5 is $5 per peep. Remember, 0.1 is $1 per peep. 0.5 is $5
Okay,
per
yeah.
peep.
Mm-hmm.
Do you understand? So remember, the market can move 10 pips in seconds. It just depends on how volatile it is. You understand? And your broker automatically, if you execute a trade on market execution, instant market execution, it will automatically charge you spread. Your trade will automatically just start reading a loss. Now let's do a real life practical. Now, click to that rectangle button instead of this circle now. Click on that rectangle. Good. You will see that the buy and sell button will pop out. Then the place to put your lot size will pop out is in the middle. So that place to put your lot size is always in the middle. Now, let's say I want to take this trade, this gold trade. Let's use this gold trade as a practical. Let's say I want to buy. Click on the button. So this is a demo account. Is there money on this account?
No, I've not funded it. Oh.
No, this is not a demo account.
It is. I've not added any money.
Check the
So
one, check the account. Go to settings. Let me see something. Swipe this down. Yeah, take that thing down. Like just swipe it down, it should disappear. So go to there's money in it now. Don't worry, it's $10,000. Like you can use.
where did you take it from?
It's magic is there. Just go to trade. You see it in trade. Click on trade. Below yourself, you
Trades.
see trades.
Oh
After
yeah, okay.
you
Mm-hmm.
see 10,000 USD. So how you know that it's a demo account? In the live account, there's one box before USD. The box is not there. It has disappeared. That's how you know that this is a demo account. So
Okay.
there are two times to know if your mentor or if in case your mentor, if you want to catch me, in case I post screenshot of trade and you want to catch me that this guy is a trading demo, I be like, you see the before USD, there's always a box before a small box before USD. It's always there for a live account, but for a demo account, it's never there. Or a prop firm, there's what we call a prop firm account. A prop firm account is not a demo account. A prop firm account there are companies that fund traders. If you are an expert trader, if you are a professional trader, companies are there to fund you up to 500 to $1 million in funding.
Wow.
You understand? So they will fund you, they will give you their rules. So there are companies like that, they are called prop firms. So prop firms also don't have that box. So, but if you are trading a live account that in which you put your own money, it always has that box before USD. So that's just it anyway. So this is where you find this is where you see your trades that are running, this is where you see your account balance and everything. Yeah, and this is where you close your trade. So let's practice. Go back to chat. Now we have this 0.01, we have the buy and the sell. We have the buy and we have the sell. Now, if we want to, let's practice with this. We have $10,000, so we can even go high to as high as one lot. So we'll practice with different lot sizes. So let's start with one. So change this to one. Good. Click on buy. Accept because this is your first time before you sue them. So accept. Buy.
Click on buy again. Okay.
Boom. Don't click on it multiple times. Click on it multiple times. You've executed the trade twice. So you can see that automatically this trade is counting in what? In loss because of what we call spread. Now it has moved in your favor. It's giving you profit. So go to trade. Let's see what we did.
How do I know it's moving in my favor?
Yeah, see, look at your screen now. If you see buy one, you see minus, or you see plus. You see some figure change with USD. It's showing
Mm-hmm,
you on your
mm-hmm.
screen. Can you see it?
Yeah.
That number changes. Actually, either you are profiting. If it's in red, you are not profiting, you're in loss. If it goes to blue, you are profiting. And you can also know from trades. Go to trade. Good, exactly. So now in trade here, this is where you see your trades that are running, the trades you've executed, whether they are in profit or in loss. So here now you can also see that at balance, your balance did not change. If you close this trade now, your balance will change. But if you look at equity, you see your equity that is changing. Your equity is changing based on whether you are losing or you are profiting. So whatever when you close your trade, whatever is in your equity is what your balance automatically change to. You understand? So
Okay.
if you are profiting, this should add, your equity should add. But because you are losing, it's reducing from your equity. So whatever, if you close this trade now, your balance will automatically just adjust to what your equity is. You understand? So that's it for this. So this buy, you can see right now you're already losing like 5 pips already. Right? So you can go, that's why I say in
Sorry,
few steps.
what does margin and free margin mean?
Margin and free margin. You remember that thing I talked to you about leverage?
Yes.
Leverage, right? So leverage now is this margin and free margin. Free margin is the leverage that your broker have added to you at the back of your account. That extra money that they push to you at the back of your account. So now
Okay.
if you use up your margin, your broker will close your trade for you even without it hitting your stop loss. If you over leverage and the trade eats into your margin, your broker will close your trade. And sometimes you can even owe your broker because you have lost
Mm,
into their money. You understand? So
okay.
that's how it works. There are few people though that owe their broker. So anyway, back to this. So what was that there now? Buy. So this buy now. So already we are losing 10 pips. You can see just few seconds. We have not gone
So
for.
where are you seeing the pips? Because I'm looking at this minus.
Remember, one
Yeah,
standard
okay,
lot
yeah,
per
yeah,
pip is
yeah.
what? $10, right? So hundred
Mm-hmm,
dollars is basically just what? 10 pips.
mm-hmm.
Do you get it?
So what is this minus 123? What's that?
That's the money you're losing now.
Oh, so it's even more than it's more than one pip.
It's more than what?
It's more than one lot. I be one.
You're not getting. You can see that the number is changing,
Mm-hmm,
right? The number is changing based on how the price is moving against you or in your favor.
mm-hmm.
Do you understand? Now you are losing $90. This is just basically
Okay,
9 pips. Now it has increased to 100. That's 10 pips.
okay.
Do you understand? Remember, one
Any
standard
number
lot.
there divided by 10.
Exactly. Remember, one standard lot is $10 per what? Per pip. You understand?
Mm-hmm,
So
Okay.
just do the math. It should just so from here, your account balance, you can know how many pips you are losing. If you know, just know that okay, one standard lot per pip is $10. Mini lot per pip is $1. Micro lot cents. So basically just know how much you're losing. And also, like I said, there's a calculator for it too. So we'll get there. There's a bot for it. So we'll get there. So back to your chart again. Let's try with another lot size.
So what did you press to get back to the chart?
So just
The
switch
chat
it.
icon at the
Just
bottom.
click on the chart icon. Okay, now let's increase this oh, to 5 lots. Let's blow this $10,000.
Ah, waiting.
So
Okay.
click on why. It's free money now. Free money, not sweet.
But what's even we are still testing? What's the criteria for clicking buy or sell? But we're just still
I
trying it.
just practicing. I'm just doing dumb shit. There's no. I'm not
Okay.
analyzing the chart. So it's like I'm not taking trades based on
So
analysis.
those two arrows that go up and down, what do we use those arrows for? Is it
Which
to adjust
arrow?
the numbers?
Which arrow?
Yeah, I think it's
Between
to
between
adjust
those
the.
five. Five is at the middle of the two.
Yes,
One
to
goes
adjust the number. Yes, to adjust the number.
to adjust the number.
Yes. You can
So
either
so
type
if
it manually or adjust it from there.
okay, so if peradventure now I want to set the limit as upper limit, the buy limit, and the sell limit,
Use the
what do I
circle
press
button.
here?
You click on the circle button beside the rectangle.
Come again, please.
So click on the circle button beside the rectangle, exactly. The circle button that has red and blue color.
Okay.
So now there's something I want to show you. Now, if you click on that circle button, there's something that this is a new update that MetaTrader 5 uh, did for beginner trader. Just put that thing down a bit. Don't put it, let's knock over her. So if you click on the circle button, it usually just brings you a line with a buy limit price, with a buy limit of your lot size. So that line, you can adjust it and use it to know how much you will lose in a trade. So now let's say I want to take a buy at where price is currently. I can take it up, adjust it to where price is. Just let it stay below where the price is. No, the line itself, not the no, click on the limit order again now. Then take see that line, you can be able to adjust it.
This
Just
one.
drag exactly. Drag it up to where current price is. Do you know where current price is? Just take it near it. It's okay. Don't put it too close. Now, if you click on the what we call SL, SL stands for stop loss. Tap it. So now, let's say I want to put my stop loss at 4351. Drag that red line to 4351.
435. Okay.
51 is down.
Mm-hmm.
Now look at your screen. Can you see after stop loss? It's showing you the figure you are losing. How much is there?
You said after the stop loss.
After you see that line now, you see there's an SL with comma, then some figures, USD, and the
Mm-hmm.
count. So how much are you losing there like this?
That's supposed to be 715.
You sure it's 715? Why are you ignoring the 12 there?
Is, is that supposed to be 12 minus 12,000?
Exactly.
Ah.
So if you use a 5 lot and market gets to that price, you are going to lose 12,750 USD, 15 USD. And the point there, I told you, you can either calculate, you can either say point or pip. The points there also stands for pip. So that the number before the point is also the pip count. Now for gold is very tricky. Yes, gold is very tricky in the sense that you have to always ignore the last digits for gold. Do you understand? Because it's more volatile than every other pair. And also the pip count is quite different from every other pair. So you have to always ignore the last digits. So here right now we have
Wait, what
203.
what what are you referring to as the last digit, please? Sorry.
So you can see that there now you have 2,543 points. So it's same thing as pips, right?
Yes.
Remember I told you, huh? So here now the pip count, the
Mm-hmm.
correct pip count is 254.
Oh wow.
So now
Okay.
think about it. If you are using 5 lots per pip is how much? Do the math. I don't want to speak because you should know per pip for 5 lots is how much. If one lot is $10 per pip for 5 lots will be what?
That's
That'd
50.
be 50.
$50 now. Multiply it times 254. You get that same figure.
Hmm.
That's what,
Yeah.
10,
Start this trade.
10,000 or oh,
Are you
So
sure?
50 times.
254?
okay.
That should give you the exact
254
figure.
times 50. Okay.
That should give you that $12,000. If not now, better lot from this.
Oh, okay. I see what you mean.
Exactly. You probably make me not to knock better a lot too. People
You are
pick my
teaching
head.
and trading. Is it not risky? But you're a
Oh,
mentor, Sha.
give me my accolade. I'm a mentor. I'm not you. I'm not beginner.
Yeah, you are correct. It's the same 12,700.
Exactly. 15 exactly. You get it right? So this is another cheat way to know how much you are losing before you execute the trade. Do you understand? So if you want to sell, you just adjust it. If you want to sell, I think you adjust it a little bit above. Drag it above. Let me see. Drag that your buy limit, not your sell limit. Your buy, but not the
Mm-hmm.
stop loss. Leave the stop loss where it is. So if you want to sell, you drag it a little bit, just a little bit to the price. Whatever price you want to sell from, you drag it there. Do you understand? So that's it for sell. Then you put your stop loss. If you are selling, your stop loss is always above price. I did not give my brother the street. Jesus. Um, so for sell, your stop loss is always above price, but for buy, your stop loss is always below price. So I'm just giving you guys the feel of lot size, why lot size is so important. So now let me give you guys a generic lot size, like what you guys can be using basically if you fund your account. Though when you fund your account, you will always let me know. You
So
understand?
please,
So
stop loss is the price we don't want to go below, Abi, before
yes,
you
stop
finish the
loss is the
money.
price you don't want to lose. That point you don't want to lose below. You don't want to lose below that point, or you don't want to lose more than that price. You understand? It's like saying you're going to, let me use Lagos here. In Lagos, you're going to, if you're on the island, let's say you're going to VI, you always tell your bus driver or your Uber, take me to VI. Your Uber should not take you past what? VI. Do you understand? That's so same thing, stop loss. Market should not go more than that price. If market goes more than that price, it should drop you off there. You no go again.
So is it safe to always move it closer to our cell, or is it okay where it's
I'll
down
teach
here?
you how to set your stop loss. You are setting your stop loss according to your technical analysis.
Okay.
Do you understand? Now we are just practicing. There's no reason for me buying or selling, to be honest. You understand?
Mm-hmm.
If I want to take a trade now, I will do a proper analysis with you guys. Like now, I'm on a trade on crypto, Bitcoin. I'm buying. There's a reason why I'm buying. You understand? I can't explain it to you guys because you will not understand anything or any reason why I'm buying. Why I'm buying. You get? So if I want to analyze this trade and execute it, I will do it. You understand? But I'm just playing around here. I'm just teaching. I'm not taking any trade. So your stop loss is based on your technical analysis. Do you understand?
Okay.
You're setting your stop loss based on your technical analysis. Do you get it? So that's just how the stop loss works. But if you are taking a signal, remember, are you guys on the Telegram channel, Happy Zone?
Yeah, but I'm there personally, but I'm not checking anything. Is it that private August? Which one?
No, the general Harvey Forex
Yes,
channel.
yes.
So on that channel, you always drop signals. You understand? Even in my channel, I drop signals sometimes, but I don't really like to. I call the trade live, or I analyze the trade beforehand, so my student know where once price get there, they just set their alert, they execute. So I'm not calling it live, like buy now or sell now. I just analyze, and my student know where to execute, where to take the trades from. But I also have like VIP where I tell them buy now or sell now. So if signals is just basically a mentor or an expert giving you trade. Do you
Mm-hmm.
understand? A signal, a signal is a mentor or a professional trader giving you trade based on his own analysis. So they will call trade either to tell you to buy now or sell now based on their own analysis, and they will take the trade alongside you. So they will give you the parameters, they'll tell you where to set your stop loss, they will tell you where to set your take profit. You understand? Now let's do that. So now you've understood a bit about lot sizes, the mini, the micro, and the standard. So now that we've taken a buy on gold, we took a buy with a one standard lot. Let's set a stop loss for the buy. Let's set the stop loss at that 4351. So swipe down, take the stop down. So you go to trade. Take the stop down so you can go to trade. Trade is where you set your stop loss. Click on trade. You see now the trade is running more than 20 pips in loss. You know, right?
Mm-hmm.
So tap on it, tap on the trade that is running. If you are using an Android, you might likely want to swipe right. So if you tap on it, you see close position, modify position. You always click on modify position if you want to set your stop loss and take profits. Good. So this is where you set your stop loss and take profit. So let's say I didn't give you a take profit, but I give you a stop loss. The stop loss there was 4351. Put it 4351. Remember, once you click on a buy or sell button, the next thing you should always do is setting your stop loss. And once you click on the buy or sell button, the next thing, so if a signal provider gives you a signal, make sure you check for the stop loss. Remember, stop loss is very important because you don't want the trade to go past that stop loss when you are losing. You don't want to lose more than that stop loss. Do you understand? So always check for your stop loss. If you don't check for your stop loss, it means you are risking the whole amount of money you have in your account balance. That's basically what you are doing. So put the stop loss at 4351 where you have not set.
Sorry, please. I'm trying to follow. Where did you click to get to this page? I'm trying to follow now.
Go back. So tap on the trade that is running, the gold buy one. The trade that is running, you tap on it like this once, or you swipe. You can also swipe right too. Swipe. You see that pencil, click on the pencil. And that way to take it there. So tap on it, you see
Okay.
modify. Swipe right, you see a pencil. So 4351. Modify. Done. So come back to charts to confirm that the traders you've set a stop loss. So you can see now on the chart now you now have stop loss line at that what 4351.
I have what?
You have
Yeah,
a
yeah.
stop loss
Mm-hmm.
line. Are we making sense? You see it now? Sadly. So that's just it. Yes, so that's where you set your stop loss. That's how you execute your trade. You buy, so remember, these are the steps in taking trade. Make sure you know the loss size you have to use. And how do you know the loss size? You need to know where you are putting your stop loss. If you click on this trade now, click on that stop loss. What are do you look at the amount? How much are you losing there?
$2,670.
Exactly. Exactly. You understand? So that's how much you'll be losing on this trade. So you remember you can check it beforehand by using the what? The limit orders. Remember, I showed you a short way of quickly checking how much you are lose on if you want to with the loss size you are using. So if you don't want to lose that particular amount of money, you can just reduce the loss size and still recheck it without you executing the trade. So let's do that. Let's make your first trade a profitable trade. Let's go and close this trade. So you can either close it from here or go back to swipe down. Don't close it from here, swipe down. Let me show you. Go back to trade. Hi. You see when you tap on it, you will see close position. So let's close it. Close. See that close? Bam. You've made $170. You can see now you have 10,170.
Was he not losing money before? Where did the 170 come from?
It has turned to profit now. I went into profit before we closed out. You were seeing blue just now, weren't you?
Oh.
The trade moved in your direction. Go to chart, you will see it. It went up. You can see that it went up. It wasn't selling. So let's practice one more time. Then we'll be done with this for today. You guys should stay for the next class because the next class I want to teach them something. I want to go into theory aspect of all this. So I want you guys to learn from that too. So click on now. Let's say you want to take this trade. I say buy gold now. Stop loss 4351. You want to pre-check what loss size should you use. So let me say, Adekemi, if you were to fund an account, how much do you want to risk on that account? If you were to fund, how much will you always want to risk per trade?
Well, if I'm in safe hands, maybe 2K, 2,000.
Per trade?
You mean the lot size or the amount I want to fund my
The
wallet?
amount you want to lose. No, if you fund now, I know I don't want to know. Say you say okay, let's say you want to fund 2,000, right? $2,000. Now, if you want to lose in a single trade, how much do you want to always lose in a single trade? Remember, funding is different from you losing. Because if you are funding $2,000, normally you are just knowing that $2,000, you are ready to risk it. Safe fund or no safe fund, there's nothing like that. So, but it should not now be crazy to want to lose it all at once. You always want to plan your trades. You understand? Because trading is based on probabilities. It's a variables of wins and losses. You don't always win. You will take loss once in a while. You understand? But if you know what you are doing, your wins will cover your losses by far if you know what you are doing. But you will lose. Your losses will always be minimal. Fine and good. So now we have, if you want to lose on that account per trade, how much do you think you will be able to risk per trade?
Okay, didn't you say we should do 0.0 lot size?
That one, now I'm giving you a fixed lot size. Now, you yourself personally, what are you comfortable with losing per trade?
Per trade. Will I say I don't know, $100?
Okay, $100, right? Good. So now let's say, because if I tell you to take a trade, first of all, the first thing in your head should be how much do I want to stake or do I want to risk on this trade? Do you understand? You are not looking at how much you're going to make first. Yeah. Anytime you want to take a trade, you're calculating how much you want to risk on that trade first before anything else. Do you understand me? You always want to know how much you want to risk on that trade first before anything else. That making sense. So now that's why I said how much you want to risk on any amount of money you fund. So you said $100. Fine and good. So $100, if you are risking $100 per trade, that means you have 20 tries. So you are not going to be crazy enough to lose 20 times back to back. That means you don't know what you are doing. You're gambling. You understand? So, but if you know what you are doing, you should come out profitable at the end of every month. For me, but personally, I try to come out profitable at the end of every week. But I don't want to put you under that kind of pressure. Every month is okay. Now, you say $100 per trade. So now let's look at let's look at you losing $100 with that stop loss of 4351. You need to now find a lot size that will allow you to lose $100 with that 4351. So let's start with 0.01. Clean that lot size. 0. Because already that's around 200 and something pips. So 0.01. Good. So now click on that circle button. Good. Why is it changing? Change it back to 0.01. That medium. Click on type 0.01 there. Yeah. Delete it. Delete it now. You can't type. Just type it 0.01. 0. You want to take 0.1? 0.01 first. Let's start there first. Let's start with the smallest losses. Then back. Just tap on your screen. That's your button should come down. Good, so you can see. So click on stop. Adjust that place to your current market price. The line. Take the line up. The buy limit line. Yeah, we're checking how much you are going to lose on this trade. Drag it to where the market is currently, the current market price. Exactly. Now click on SL. That's stop loss. Now pre-checking. So drag the stop loss to 4351. So how much are you losing here?
Is this
How much?
23.4?
It's not up to your 100. So let's increase it. So how many times, if we're using 0.01, we need like 4 times. So let's try 0.04. Let's see if that works. If that'll fly. Yeah, so this is okay. So you can see with 0.04, you are going to be losing what?
93.6.
Exactly.
93.6
64, exactly. So that's how you'll be adjusting. That's how you'll be doing it until you get. So you always start with 0.01. You check it. How much is 0.01 making me lose on this trade with this particular stop loss? If it's not up to the amount of money you want to lose, you increase the lot size. Do you understand? So that's how you always do it. Now, since you are correct now, you just have to click on buy. That's all at the top.
So was it calculated based on the $10,000 that is in the fund? Or
I'm calculating it based on what we just discussed, not what is in the account balance. You told me that you want to risk $100 per trade. Am
okay,
I
yes, I
right?
get. So we use the PIP and all that to calculate.
Exactly. You told me you want to risk $100 per trade. Am I right?
Yeah.
Exactly. So we tested it out just now. We tried to see, okay, what loss size is going to make us lose $100 exactly on a trade?
Mm.
You understand? So what loss size? So we've now found out that 0.04, though it's not exactly $100, but this should be okay because if you increase it below this point, if you increase it above 0.04, you'll probably get a higher, you probably lose higher than $100. So this is almost equivalent to 100. This is the best guess, 100. So what we did now is you check the loss size that is compatible with that your $100 loss according to this stop loss.
Mm-hmm.
Do you
I have a
understand?
question.
Yeah, shoot.
How did we set this lot size to that 4351.27?
The stop loss.
Yes, how did we set it to
So
that
I'm the one that is
4351.27?
giving her, she's taking the trade based on, I'm giving her a signal. She's not taking the trade based on her own analysis. She's taking the
Okay,
trade based on the fact that I am giving her a signal. I'm telling her, yo, Adekemi, look, buy good now. This is the stop loss, 4351.
got you.
You understand? So now, you guys are not going to be taking trades based on your own analysis. No, until your second month, in fact. Except you learn very fast, right? So,
Okay,
but until your second month, that's when you'll be taking trades. So, most of the trades you will take this first month will be based on signals, either from me or from Harvey.
okay,
You understand? So, anytime somebody gives you a signal, you always need a stop loss. So that stop loss is what is working alongside your loss size to determine how much you are losing. You understand? You can see we are not worrying about the profits because your signal provider will always tell you to close when it's time to close, when the trade is in the right profits, or when the trade has hit a specific target. Your signal provider will tell you to close. Don't close a trade if the person that gave you the trade has not told you to close, except it's your own analysis.
Okay.
Okay, I have a question, please. Yeah, so now that we've set the stop loss at a particular level, this 4135 or
Yeah.
4351, and trade is, ongoing, like you said, the market is dynamic.
Mm.
I'm looking at the pattern on this graph here. So assume that this is where we've set stop loss. It means that when it gets to this price, is it going to automatically just close the trade? Because it looks as if
Yes.
following this pattern, even
If
though
you,
it went further down, it came back up again. So that means you will lose that opportunity.
sorry, I don't repeat you. It's like this. Yeah, I missed it at some point. You said something.
I'm saying, looking at the picture of this graph, it looks
Yes.
as if the price went down far below what
And
we
went
had
back
set
up.
as this, and then went back up.
Yeah,
But
like now,
if you
like I
have
said,
set a
like
stop
yes,
limit,
it might take you out, but like I said before, we are not taking this trade based on technical analysis. We are just practicing, right? But let's say
okay,
it eventually hit your stop loss. Yes, you will lose that amount of money.
okay,
Is that, but we are not taking the trade based on any analysis. We are just practicing that because, like I said, you are not going to be taking trades on this first month based on your analysis. You are going to be taking trades based on
mm,
your signal provider, right? So you practically know majority of the time, except I explained to you why we took the trade, except I analyze it
yeah,
with you. That's the reason why you know, okay, why do we buy, why do we sell? And that's if I've started teaching you technical analysis, and that's if we've gone far. You understand? But this is just, we are just
mm,
starting. So you literally don't know anything about these charts. You understand? But I'm just teaching you guys how to take a trade and how to execute the trade, how to use this MT5 properly. A lot of people
okay,
don't do this.
yeah,
All this thing I'm doing is just, I'm just doing it so that you guys will have a good idea so you don't lose money. You understand? But what I'm doing
thank
here is
you.
just show you guys how to take trades on MT5. Do you understand? It's not like I'm teaching you technical analysis. Do you get it? So that's just it. So let's click on the buy.
Yeah, it's clear. Thank you very
Guys,
much.
let's click on the buy and let's execute this trade so we can just do it. We'll go to the next topic. I need to send a link to these guys.
Okay, do I just click on buy?
Yeah, yeah,
Or
you
it
done it. So go
just
to
start?
trade. Go to trade. Let's set the stop loss. 4351. Ah, come on, my brother, I will swear from you. This trade I did not give you. You clear. So have you set the stop loss? So confirm it on
Mm-hmm.
chart. Exactly. So you can see it's there. So that's how you confirm. So make sure
Mm-hmm.
that the line, you see a stop loss line on your chart to confirm that. So we are going to allow this trade to play out over the weekend, and next week you come back on Monday, you see if you hit your stop loss or hit your take profit, or you see it in profit. So you're not going to
Okay.
close this trade. You understand? So
Okay.
just let it play out so you see it. So everybody, if you did the same thing too, you can also do the same thing on your MT5. Like that should be like an assignment. So I'll expect you guys to do the same thing on your MT5 on the Monday where you guys come back. Oh, yeah. So let's go. Let's continue to the general class and just let's move on from there.
Okay, sorry, quick one, please. Where do we get the recording?
I'll
Are you
send that
sending to us
tomorrow.
by mail
Yesterday,
or
I
you
need
drop it?
to like cut some. I need to edit some things and send to you guys the recording
Okay,
on
because I didn't
it's
see
on
the
my
recording
PC.
for the
Yeah,
last
yeah,
one.
it's on my PC. I'll send
So
both.
where should we expect it? In the email or the chat
No,
room?
your group. I'll send it to your groups this
Group.
night.
All right, thanks.
If
Yeah,
I don't send it this night, remind me tomorrow, please. Tomorrow is Saturday, there's no class. So if I don't send it this night, just text me.
okay,
Send it to
great.
you guys tomorrow.
Thank you.
So okay, let's move on to one next thing. How you guys doing? General people, Emperor and Shola. You guys are good, right? Okay. So give me a minute. We'll continue from where we stopped yesterday. We are still we're still doing the So I'll send you guys some recordings, the general students, so you guys can watch it. So you guys will. I'll send you guys some recordings of yesterday and today's class. You guys will watch it, please. Then if you have any issue, just text your general group. I'll reply you there. But let's continue from where we stopped yesterday. So give me a second. I'm good. Let me share my screen so you guys can everybody can see my name. Good. So yesterday we did this. So let's just refresh our brains on what we did. So yesterday we learned what the forex market is, and we learned that the forex is what is the forex market? Forex market is a word to be derived from two other words: foreign exchange. Forex is buying of currencies online using any of the available, like you guys on your MT5 or your trading view. Forex is a global, decentralized, over-the-counter financial market for the trading of currencies. So Forex being an acronym for foreign exchange involves the online buying and selling of currencies in pairs. It is the largest financial market in the world and has a $6 trillion daily volume compared to the largest stock market, the New York Stock Exchange, $22.4 billion. So the Forex market is like the largest financial market in the world. I explained this whole part that trading in the forex market require 5% strategy, 5% risk management, and 90% psychology. Strategy will teach you how to trade, risk management will help you remain in the market, and your ability to manage your risks will help you build your psychology. An example of when you participate in forex markets is when you go to different countries and exchange one currency for another. Buying currency is like buying a share in a particular country, almost like buying stocks of a company. The exchange rate of a currency versus other currencies is a reflection of a country's economy compared to the other currency's economy. The forex market does not have a physical location or a central exchange. The entire market is run electronically within a network of banks over a 24-hour period. That's 5 working. The forex market between closes tonight by 10 p.m. So it will open on Monday by 10 p.m. Over a 24-hour period, 5 working days a week. It's only the crypto market that opens 24/7. It's also known as an over-the-counter OTC or interbank market. What forex is not. There are many misconceptions about what forex trading is. However, before you start out on this journey, you need to understand what forex is not. It's not gambling, it's not a get-rich-quick scheme, it's not a Ponzi scheme. We've talked about all this yesterday, so I'm just refreshing our brains on what we did. So we have the different platforms you can trade. You obviously have downloaded MetaTrader 5 and your trading view on any of these websites or app stores. So I explained the different assets we trade in the forex market. Like I explained, you have crude oil, which is commodity. You have oil, which is commodity. You have coffee, which is commodity. Gold and iron are both metals. Then you have the stock market, which is NAS 100, US 30, Germany 100, UK 100. Those are like the stock market. Then you have the crypto market, which is like Bitcoin, Litecoin, XRP, Ethereum, and so on. That Dogecoin, which you trade also in the forex market. Then you have also the regular currency pairs, your GBP, your USD, your CAD, your NZD, your AUD, which you also trade in the forex market, your regular currency pairs. Now, different major ways you can trade the forex market. We explained this also yesterday. You can trade the forex market through the fundamental trading. Fundamental analysis is the trading of news and world events. This aspect of forex trading deal with macroeconomic data or variables of different economy over a period of time, which shows the state of nation as reflection on its currency. Microeconomic news are GDP, gross domestic product, unemployment rates, inflation, industry rates, political issues, natural disaster, terrorism, and war. So these are like the news that has to do with fundamentals. So basically, we have some macroeconomic news. Apart from this GDP, we have what we call CPI, Consumer Price Index. We have the NFP, non-farm payroll. We have the I've forgotten. We have like three other ones that are also very strong that actually affect the forex market. That we also have the interest rates, which is similar. We also have the interest rate and the unemployment rate. So the unemployment rate is quite similar to the NFP, non-farm payroll. But the rest here, inflation is still CPI, Consumer Price Index. Then we have the industry rate, which is the interest rate, similar. Then we have political issues like your Donald Trump speech, um, your CBC, central bank governor speech. You also have natural disasters, which are also news that affect your currency pairs. And you also have terrorism and war, like the US and Iran war is currently affecting the forex market. If you guys have been actively trading for a year now, you would have noticed that. Then you also have like elections too that also affect the forex market. So that's the fundamental aspect of forex trading. Then we also have the technical analysis, which has to do with your trading view and your MT5. That's the technical aspect of forex trading. Then you have the sentimental aspect. The sentimental aspect has to do with both fundamental and technical. You're using both fundamental and technical to speculate the market. You're using the two of them together. That brings you to sentimental analysis. Now, cause of failure in Forex is greed, revenge, pride, fear, lack of trading plan, lack of trading journal, lack of patience, over trading, lack of discipline, wrong timing, wrong expectation, focus on money, not growth, and bad entries. So, forex basic and terminologies. This is where we were yesterday before we closed. So we have the volume. The volume is the total number of lots traded in the forex market. I will explain what a lot is in a bit. So this volume has to do with your broker. It does not really concern you. Spread is the commission your broker charges you on every trade you place. You understand? So anytime you execute a trade, most of you will notice that your trade just automatically just start reading a loss. It's because of what we call spread. Then we have the leverage. The leverage is a virtual loan that your broker gives you. You understand? They just once you create an account and you're funding the account, your broker gives you what we call a virtual loan. Do you understand? To profit from relatively. So your broker gives you that virtual loan, but you're not going to see it, but it's there. But you notice it in your margin, though. So we have stop loss. Now, stop loss is an order used. I think we explained this one too yesterday. Stop loss is an order you set that protects you from losses. So stop loss this is a peg used by the trader at a decidable price, which shows the maximum amount of money or your capital you are ready to lose or part with. So stop loss just tells you the particular amount of money you want to lose or you are ready to what? Part with on every trade you take. A stop loss order is a risk management to align a position to be closed once it reaches a specific preset price. This can protect against further losses on an open position if price continues in an unfavorable direction for the investor. Take profit. Take profit is the opposite of stop loss. So the reason why people say take profit is so that like if you are busy, you always want to set a take profit order so that once price hits your specific target, it will close you out in profit. So the trade does not hit your target and reverse back. So that's the reason why we set take profit. But if you're actively monitoring your trade and price gets to your target, you can just close manually from your MT5. So we have lot sizes. Lot size now is a portion, fraction, denomination, or value of your entire capital that you have chosen to expose in taking a particular trade. A lot in forex trading basically refers to the size of a trade or the amount that a trader trades at any given time. Because the lot size directly influences the risk you are taking. It is the first thing you need to fully understand before identifying your entry or exit point. Even the best trading strategy will fail you if you don't have a clear idea of the lot size you should be using. Yes, the lot size is an important aspect of trading that you need to know about. You need to be sure of. So, which I'm going to explain now. That's the reason for this class. So, lot size is the particular amount that you're willing to expose to the market that you want to risk on a trade. So we have different type of lot sizes. We have the standard, we have the mini, and we have the micro. The standard lot is a lot size that has to do with one and above. That has to do with a whole number from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, 100, 50. They are all standard lots. Then we have the mini lot. The mini lot 0.10. So let me get back to the standard. The standard lot is any whole number. But now they say one standard lot. Let's use the variable of one standard lot. One standard lot is what we call PEEP. I don't know if I explained that to you. Let me explain this before we go back to lot size. A PEEP stands for percentage in points and is the smallest price movement any exchange rate can make. So pip is the unit measurement. A pip is the unit measurement at which price moves from one place to the other. So basically, pip is like is the unit measurement in which you use to measure price movement from one place to another, just like how you measure distances. So if you want to measure distance, you measure it in miles and kilometers, and you want to measure height, you measure it in inches and feet. So in forex, we measure price movement with what we call pips. So it is also the slight change in price movement, which can either be an increase or decrease in price movement. Pips are the means by which market profit and losses are quantified, in which we are used to multiply. In which pips are what you use to, you use to like calculate your lot sizes. You use pips to calculate your lot size. That's basically what they mean here. So now let's go back to this lot size thing. So now, for one standard lot, if the market move one pip, that's basically means market move one step. You understand? When the market move one pip, or basically means market move one step, either in your favor or against you, you'll be making or losing $10. While for the mini lots, that's 0.10. The mini lot is the figure after the decimal point. 0.10, 0.20, 30, 40, 50, 60, 100. That, like, sorry, not 100. 0.10, 30, 40, 50, 60, 90 to 90. So 0.10 to 90. But 0.10 per pip is $1. Right? So if market move one step, either in your favor or against you, you make either you make or you lose $1. So per pip is $1 for the mini lots for 0.10. While the micro lot is the smallest lot size you can use, 0.01. So it's being calculated in cents. So per pip is 10 cents for 0.01. So 0.01 lot size, profit per pip is 10 cents. While 0.02 lot size, profit per pip is 20 cents. 0.03 lot size, profit per pip is 30 cents. 0.04 lot size, profit per pip is 40 cents. 0.05 lot size, profit per pip is 50 cents. 0.06 lot size, profit per pip is 60 cents. 0.07 lot size, profit per pip is 70 cents. 0.08 lot size, profit per pip is 80 cents. 0.09 lot size, profit per pip is 90 cents. You understand? So that's just it. So if you are using a lot size, you just need to multiply. Just that it's always good to start from the lowest lots, especially as a beginner. It's always good to use a micro lot as a beginner. Don't move past the micro lots until you understand how to trade, until you know how to trade. Don't move past this micro lots. I beg you. Unless it's very easy for you to blow your account in a mini lot or a standard lot, because the market can move 10 pips in seconds. Very, very easy. The market can move 10 pips in seconds. Like, it's very, very easy for the market to move 10 pips in seconds. Hold on. Give me a second, please. Let me send the trade. Oh, so I've done the micro. Let's move to the mini. The mini lots per pip is mini lot per pip, 0.10 per pip is $1. So if you're using mini lot per pip, market move one step in your favor is $1. 0.20, $2, 0.30, $3 per pip, 0.40, $4 per pip. So the more pip it moves in your favor against you, you just multiply. That's just the idea behind all this. You just need to know you just need to know the first variable. Okay, per pip, how much do I make? How much do I lose per pip for this particular lot size? So the more pip it moves in your favor or against you, just multiply it. So why standard lots? One standard lot per pip is $10. Two standard lot per pip is $20. Three standard lot per pip is $30. Four standard lot per pip is $40. Five standard lot per pip is $50. Six standard lot per pip is $60. Seven standard lot per pip is $70. Eight standard lot per pip is $80. Nine standard lot per pip is $90. So you just need to, multiply. I've already explained these pips to you guys. So pips calculation, to calculate your pip is to know your amount of trading account. risk percentage, risk amounts, and stop loss. When you know this, you'll be able to know what lot size to use. You need to know how to calculate. To be honest, you need to know how to calculate pips so that you can know the lot size to use. Because if you don't know how to calculate pips, you might find it hard to know the lot size to use. So now I'm not going to use this calculation here. I'm just going to go ahead and show you the ways in which you can calculate pips. Now, number one, you can either do it here. Yeah.
Yes, I know.
Who is here? Please mute. So this is a trade I'm currently on. So let me use this trade as an example. So we have the long and the short position too. Let me use something different. Let me use gold. So we have the long and the short position too. Now, the long and the short position too is found on your trading view. You see it on this angle of the chart. Let me use. You see it here on your toolbar, your tool section. So it's like I think it's the fourth, right? Or the fifth. 1, 2, 3, 4, 5, the fifth. So you see it, the long position too is used to calculate your pips for buys. It's used to calculate your it's used to calculate your stop loss and take profit. It's used to calculate the pip calculations for your stop loss and take profit for your buys. While the short position too is used to calculate the pip calculation for your stop loss and take profit for sales. So this is basically the short position tool. This is how it looks. This is the short position tool that I use here. So this short position tool, this green section is the take profits, while the orange section is like the stop loss. So this is where you mostly be focusing on this orange section. So if they give you a trade, all you just need to know is the stop loss price. If someone gives you a trade, all you need to know is the stop loss price if someone gives you a trade. Or if you are taking a trade by yourself too, all you need to also take note of is the stop loss price. You need to take note of the stop loss price. So what you need to do is just calculate, just drag this. If you are taking a sell, you want to drag the short position to where the stop loss price is. So let's say my stop loss is 4,450. I need to drag this short position to 4,450, which is here. So now where's the peak value? Where's the peak value for the stop loss? Now for gold, because gold is a very volatile pair, you're always ignoring the last digits. I said it to my private students, I'll say it to you guys again. You're always ignoring the last digits. So the stop loss price, the pip calculation for the stop loss, the pip value for this stop loss is this number before amount. This number before amount. Same thing here, the take profit value, pip value is the number before amount. It's always the number before amount. So now here, the pip value for this stop loss is 377. So only for gold, you are going to ignore the last digits. If I were to trade like your regular currency pair, if I were to do something like this, let's say I want to sell this pair. I do something like this. Boom. I want to sell this pair. I do something like this. Yeah, now I don't need to ignore the last digits. This is 97.2 pips. I'm not ignoring any last digits. But for gold here, I need to ignore the last digits. This is 377 pips. So you can see the difference, because gold is very volatile. But for here now, you can see that this is like 97. It's not even up to this. So gold is very, very volatile. That's why gold can make or break you. And that's why most people love it, because it's fast money, but it can also destroy you fast. So yeah, this is 377 pips. So right now, you need to always know the pip value for your stop loss. The pip value is like basically because the forex market now doesn't know the money you have in your account. The forex market, it's not reading your account balance. You understand? It doesn't know whether you have, it's just only your broker that knows what is in your account. The forex market itself is not reading your account balance. It's not knowing whether you have $3,000, $2,000, $500, $1,000. It doesn't know and it doesn't care. Do you understand? The forex market doesn't know and it doesn't care. So, but how does it know how much you are risking? You are going to tell it by knowing the peak value for any trade you are taking. You are telling it how much you are risking by telling it the peak value. So it knows by the peak value. So this peak value is what you will now convert to lot size, and you input the lot size on your MT5. You execute. So now let's convert it. So we have like 377 pips here. So how do I know that? How do I, know what lot size to use with 377 pips? So first, you need to know how much you are losing yourself. You need to ask yourself how much I want to lose. So let me use an example. Say I want to lose $100 and I have this 377 pips. So how do I know what lot size to use if I'm losing $100 for 377 pips? So two ways. Your number one way is by using there are so many ways to go about this. So I've showed my private student one. This is another method I'm going to show them again. So there's another method you can use. You can do that by first, there's a bot on Telegram, which you can do that, this bot. So all you just need to do is come here. So you can just say, I'll send you guys this username, or you can just search for it anywhere. So you click on your menu, you click on risk, calculate. So you click on risk, it asks you with pair. It can give you something like XAUUSD. So we're trading. So it's asking you long or short. Remember, long is buy. Long is a terminology for buy. Short is a terminology for sell. So I'm telling it short. So next is going to ask me my account balance. So I'm saying, let me say, let me use 100. So risk for this trade. How many percent I want to risk for this trade? Let me say 100%. Because that's what I want to risk, 100%. Okay, so you just put 100, ignore the percent. 100, so you don't put the percent. So ask for entry price, you give me your entry price, where you entry the trade from, so important. Your entry price is also important, and your entry and your exit price are important. So I'm entering the trade from 4412. I'm saying 4412. It will ask me to come back with the stop loss price. You should come back with the stop loss price. So pick a stop loss price. Sorry, stop loss is 4450, 4450. You can just do skip. It will ask for skip too. It's asking for the screenshots of your trades. So that's giving you the lot size to use 0.02. 0.02. So now let's confirm that. So with 0.02, remember 0.02, 0.02 per pip is 20 cents. So let's convert. So if we have 100 pips on 0.02, that'll be 100 pips on 0.02. That should give us, I think, is it $20? Yeah, that should give us $20. 100 pips on 0.02 should give us $20. Yeah, I think so. That should give us $20. Then 200 pips on 0.02 should give us $40. That's not 100% correct. 300 pips. Okay, this is 377. Okay, 300 pips on 0.02 should give us $60. Then your other 77 pips should be giving us around, other 77 pips should be giving us around $14 or $15. So it's quite similar. So they are rounding it up to 7 something. So, but if you increase it to 0.03, I think it will be more than your $100 if you increase it to 0. Let's try 0.03. 0.03, 30 pips. Yeah. So 0.03, 30 pips is already $90. Wait till this. Okay, Naira. Add another one now. For that, just chill when it comes down. Add another one. Yeah, add another position. So 0.03. 0.03. 300 pips is like $90, so it's more than, so the 77 pips is already more than, so that's why they round it down to 0.02, which is the nearest lot size, so you're losing that $100 you want to lose. Another method is also by using my fxbook.com. You can also use my fxbook.com for this, which is another method. So let's do something, my fxbook.com. So you come here, my fxbook.com looks like this. So this is my fxbook.com. Let me just explain this. You can use it for so many things also. It just works similar to how this bot works. So you can use it also to check your news and also to check your trading sessions. But let me show you for news. For news, you come to calendar, you click on economic calendar. So economic calendar to show you the days and the time that you're having certain news. Yes, that on certain currency pairs. So right now you're having these are Euro pairs for today. So we also had news on USD. So mostly you look at the currency pair you're trading. If you have USD in that currency pair, you want to watch out for news if you have USD news that day, and also you want to check the time for that USD news, and you want to also check for this. So you're focusing on high impact news. By the way, you're ignoring every other news. You're looking at high impact news, then you're looking at the currency. If it's an high impact news, you're looking at the currency. If the currency um is the currency you are trading, you have to pay attention to the date and the time. But if it's an high impact news and it's not the currency you are trading, you ignore it. But if it's an high impact news and it's a currency you are trading, that day you have to take note of the time that the news is coming out. So that's just basically it. So economic calendar is where you check every fundamental news that is happening in the forex market. Now also for calculating your lot sizes, you have to come to where we call calculator. Sorry, my PC is hanging. You have to come to where we call calculator. I don't know why my PC is hanging. I don't have time for this. Hold on. So calculators. So you come to calculator, you look for position size calculator. Then a similar thing too. Search for the currency pair XAU USD. So the current account currency, whatever account currency you are using to trade, there mostly it's USD, so you always leave this at USD. The account size, let's say you have $2,000, then you want to risk 5%, or you can do swap with money. So if you click on swap with money to give you the USD value, so you can just say $100. Now, so you're asking you how many pips is that? So how many pips we got there was 377. Now, in this trade size lot, for gold, remember, you are removing the last digit. So here, you are going to delete 10 and leave it at 0.01. Then you click calculate. So here now it's giving you 0.03. But 0.03 here is not that 100% accurate because you will lose more than $100 with this particular pip. So you see, my own bot is better than this. Because if you use this one, you will lose more than $100. Now, this one is rounding it down. This one is rounding it up for you. This one is rounding it down for you. So that's just it. So these are the ways you can use to know what lot size. But before you know what lot size to use, you need to know how many pips you are risking. There's another way too on your MT5, but I don't have that. I won't be able to show you guys that one. You can use the limit orders. So there's a recording for it. I'll send you guys a recording. You watch it so you can see. There's another easier way too. You can use the MT5 to know how to know the lot size you have to use. So when you watch the recording, you'll see how to use the MT5. So anyway, that's it for pips and lot sizes. Then we have currency pairs. Forex is traded in currency pair. You already know. I've explained this one. We already have exchange rates, the rate of which one country's currency can be exchanged for another currency as exchange rate. Margin. This is the boundary. I think I explained this to my private student. This is the boundary that separates your capital and the virtual leverage given to you by your broker. Also, margin is the amount of collateral you have used in placing trade. Margin is simply a portion of your funds that your forex broker set aside from your account balance to keep your trade. So it's the leverage. It's that leverage your broker gives to you. You understand? That's the margin. Risk management involves the use of strategies in order to help control or reduce financial risk. So this risk management is something I will teach you. You learn it in the course of this class. An example is a stop loss order, which is used to potentially minimize losses on the trade. A stop loss order is also a good risk management strategy. So, base currency, the currency that comes first. So, if you're having Euro USD, Euro is always your base currency. The currency that comes first is your base currency. Quote currency is the second currency. GBP USD is the second currency, is your quote currency. Then long position means buy. Long position just means buy. Short position means sell. Bid price, the market price for the sale of an asset. Ask price, the market price for purchasing an asset. Appreciation, an increase in the value of an exchange rate. So these are just terminologies that you might just be hearing a lot in the forex market. Depreciation, a decrease in the value of an exchange rate. Gapping. So gapping is something that happens in the forex market, that it happens over the weekend. You understand? So gapping is something that happens over the weekend. So when when the market closes, like the market will close today now, if there's a trading activity that occurred over the weekend, because the market is closed, once the market opens on Sunday night, it will open with a gap. So it's trying to open it a gap to adjust to the trading activity that occurred over the weekend. So an opening price below the previous day's close with no trading activity in between. So that's gap. So swap is an interest that you either earn or pay for opening your trade overnight. So remember I told you the reason why we use access market is because access market doesn't charge you a swap fee. A broker is a financial service company. You already know what broker is, that provides the platform for you to trade. Blah blah blah. I've explained all these things, currency pairs. I'm not going back to them. So I think that's all for today. Uh, that's all. We've done currency pairs and all that. So that'll be all for now. Our next class will start teaching the major topics on forex. We'll start looking into technical analysis. We'll cover the whole basics. So I'll send you guys some videos tonight or tomorrow that you can watch, and everything will all just make sense and you can practice over the weekend. Then come on Monday, we'll continue with the major topics on analyzing the forex market. So I'll show you. We'll start teaching stuff like market structure, trend line from on Monday. You understand? So, are we good? Are we good?
Yeah, we are
Okay.
good.
So I'll see you guys. I'll see every one of you on Monday. Everybody have a nice weekend.